in this series on funding a business, this particular one is on sourcing of funds. So there are a number of different places you can source funds to start your business. And I'm going to cover the most common ones, and I'm going to go in depth on two of them that most people don't understand as well as they probably should. But obviously, one source of funds is existing reserves that you have set aside for a business in the future. You've already saved up or invested, and you've got current balances that you can leverage. The second source of funds that's pretty common is home equity lines of credit. So if you've got home equity, very easy, cheap capital that leverages your home equity. So great source of funds. A third source of funds is friends and family. So a lot of people, most businesses in the world actually start up with personal funding as well as friends and family funding. Now, the other two sources that I want to cover thoroughly with you are number one, an Sba loan, and then number two, rollover of retirement funds. So on the Sba loan, getting an Sba loan is really easy to do. We've got a strong pedigree, a strong history, a strong success within Action Coach. The key things to get an Sba loan, the banker wants to know, number one, are you the kind of person that's got the drive, the determination, the work ethic, the right character that they want to do business with, and that will actually perform well in the business? So the banker is looking for that. Secondly, the banker is looking for a good business plan based on reasonable numbers that show that the bank is going to get the loan paid back and that the business is going to be healthy financially. So the really cool thing about Action Coach is we have so much history. As you do validation and you talk directly with our franchise partners, if we make it to that step of the process, you will get actual numbers that you can use from them as you build your own personal business plan. Things like, what's my marketing spend to bring on a new client? So if we know what that marketing spend is, and we know essentially what the acquisition cost is for a new client, and we know how much the clients spend on average when they work with us, how much they pay us, and you're going to learn that directly from our franchise partners that are in the field doing this every day. You'll use real data. It's not just data that we've shared with you. It's data that you're going to source directly from our franchise partners to build your own plan. You'll specify that to the bank. Look, this is real data that I got directly from these people out in the field doing this every day, and this is what my plan is built on. So it gives a banker a lot of confidence that the numbers are real. This isn't just some idea you hatched up and dreamed up yourself. So because of the history and the successes, you get to leverage all of that from the bank. The second thing the bank wants to know is that you're actually paying yourself a salary on day one to cover your income for working. So they want to know a couple things financially. Number one, that it's a good business plan, which we already talked about. Number two, that you as the person that's going to be operating the business, running it day to day, the president, GM, CEO, whatever role you give yourself, that you're fairly compensated to actually operate the business. And they want to know two things specifically. They want to know, number one, that your bills are paid at home, that you've covered the mortgage, you've covered the car payment, you've covered the kids' education, whatever your fixed overheads are at home. They want to know that you're paying yourself, or that your business is paying you enough money to cover that stuff. Otherwise, they know they're at risk of you quitting and going somewhere else to make money, and they don't want that. They want to know that you're going to stick it out, you're going to get the return on investment, pay off the loan, etc. The second thing that they want to know financially is that you are hungry to grow the business. So the way you want to think about this, generally speaking, the advice I give is, instead of building a salary into your business that's commensurate with what you've historically earned, lower it a little bit, tighten the belt up a little bit so that they know you're hungry, that you want to get back to what your lifestyle and your is built on financially, but that you're at least covering the bills at home, that you've got some margin there to work with. So that's the big thing on the SBA loan. The other big thing is you only personally need to, generally speaking, bring in 10, 15, 20% of the initial capital that's required to start up the business. The rest of it, the bank will generally lend you. So it's kind of like buying a house that way, or investing in a house. You come in with a small amount of capital, the bank will pay the rest. The really cool part, though, is in terms of investing in a business, is your business will pay back the loan. You're not the one paying it back. Your business is. Very different than investing in a home where you're the one that has to pay the bank back. So the really cool part is your business will pay it back if you build the right business plan and execute properly. So that takes care of SBA loans. We are pre-approved by the SBA. We're on what's called the franchise registry. So we're pre-approved as long as you're the person with the right character, the right ability, the right drive, the right business plan to execute. It's very simple to get an SBA loan. The second method of sourcing that I wanted to cover thoroughly with you is rolling over your retirement funds. So a lot of people that come out of the corporate world, especially like I did when I first started our business, a lot of my net worth was in my 401k. And so similar to in my corporate life, we had a 401k, and I would roll my money from one company into another, and then oftentimes I would invest it right in company stock and that kind of stuff. Same kind of thing. There's a rollover provision for business owners to start their own businesses where you can set up your business. You can then within the business set up a qualified retirement plan. Then you can do a rollover of those funds into that plan. And then what you do is you invest the dollars that are sitting in your retirement plan into your own company stock. So essentially your retirement plan owns stock, cash goes into the business that you get to use, tax-free, penalty-free, completely legitimate. There's a handful of companies around the country that will set these up for you. And the good ones, the legitimate ones, and we can refer you to them. They all do the exact same thing, but they get an actual letter of authorization from the IRS for every case that they put together, where the IRS sends a letter on IRS letterhead saying there's a perfectly legitimate use of retirement funds and no taxes, no penalties are due. The cool part about utilizing the rollover funds is there is not a loan payment every month, and it doesn't impact your credit history at all. And you're actually using funds that are typically unusable without huge penalties and taxes to access those funds. And the other part that's really cool about leveraging the rollover, if that's a vehicle for you, is later you can reverse a transaction and quote unquote buy back the company stock. So essentially, as you grow the business, your valuation of your business goes up. So let's say over time you increase it by 5x. And just to use some simple numbers, let's say you pull out $100,000, you do a rollover, you get started, and later your business is worth $500,000. You can buy back the company stock for $500,000 and shovel a bunch more money back into your retirement funds. So it's a really cool vehicle. Later on, after the business is growing and cash flow positive and worth a bunch more money, you can actually go get an SBA loan if you wanted to, because the business is already cash flowing more than enough to fund that, or even a conventional loan without the SBA, and buy back that company stock if you want to shovel a bunch more money back in. So it's a really cool strategy to exploit some tax code and create wealth and launch your business. So those are some of the sources of funding, and depending on your unique situation, we can help you identify what the proper vehicles are and point you in the right directions to some of our partners that are in banks that know our business model really well, or people that do some of the rollover transactions as well.